on cash, because A, it's almost impossible to time the market, and B, just because I think it's going to reach 280 level, it doesn't have to reach the 280 level, right? There are circumstances based on the news side. I think it will reach 280, but if there is more positive news, which I cannot predict, then the market might hold it to 93 level and continue to test higher. So you need to be prepared for both scenarios. You need to be prepared if the market reaches 280, that you don't panic and you actually deploy cash to get into longer position, start deploying your cash to buy positions. And if market reaches 320, maybe you didn't realize, you had a large cash position, but you still have equity and your portfolio is still growing. So you have to be, as a trader, I think you have to be prepared for both outcomes. You need to pick one strategy, right? You need to have a view on the market, down, up, neutral. But you need to understand that your view on the market, if you bearish, that the market doesn't necessarily mean that the market is in bear trend. Or if you're bullish, that doesn't mean that the market might not break 320 level for the next 3 months. So you have to always go to these forward-looking scenarios, right? Close your eyes and imagine, we're end of July or end of August. Market is at 280. How do you feel? What are you doing? Or imagine we are end of August and market is at 340. How do you feel? Review your journal, review your trading plan in the future, and just make it as vivid as you can. And once you do a couple of these exercises, you will see like the main motivational force, at least like behind my trading decision, is to look into the future and make sure I'm comfortable with both outcomes. Right? One outcome I'll make more money, one outcome I'll make less money, or have a losing position. But be prepared for both outcomes. And if you're not prepared, if you panic, that's the fear of future regret. Dr. Menaker always talks about fear of future regret. If you're going to have a regret that you didn't have enough stock position if the market reaches 340, or you're going to have a regret that you had too many positions if the market reached 280, that means you did not follow that first two rules in terms of your cash and portfolio drawdown, right? Because these are the rules, and you should make these rules based on fear of future regret. And we all have different risk tolerance levels. My fear of regret and another person's fear of regret is totally different. So that's where ultimately you will have to make a decision about how many positions you're going to have and how often you trade.